Welcome back. You're watching Markets Today on CNBC-TV18. Let's go to the rest of the headlines that we're tracking for you. The fourth headline is Cochin Shipyard was buzzing in trade after bagging a new export order worth 550 crore rupees from Netherlands-based Samskip Group. Vivek is back with us and he's going to fill us in with the details about this order win and what it means for Cochin Shipyard.
In an otherwise very dull market, this particular stock is managing to hold on to its gains. So what's actually happened is that the company has received an order for delivery of 2 container vessels, and this is from a Netherlands-based company. The project cost for these 2 particular vessels is close to 550 crore, and positively for the company, this particular clause, there's a clause in the contract says that the company in the future may have to supply 2 more vessels. Now what the company is saying is that, and the commentary is quite strong as far as the press release is concerned, they're saying that these particular ships are intended to serve the European market, where sustainable transportation solutions are still in quite high demand across Europe. On the back of that, on the back of the positive commentary, clearly we are seeing quite a bit of a perk up in today's trading session.
Some more corporate opinion conversations. January and the month of February were good months for Berger Paints. That's what the company director and CEO Abhijit Roy had to tell us. He said that they expect double-digit growth in the fourth quarter. Take a look.
January, February has been good months for us. Demand has been back to normal almost. March also so far looks good. So fourth quarter should be reasonably good. We should register double-digit growth rate. This El Nino thing has to be sorted out, because as of now, it looks like that, we will be in the 12 to 13% range in terms of volume growth. And that's where we are pegging as of now.
Staying with consumer names, days after Tata Consumer Bisleri deal talks being called off, we learned that it's not just the valuation, but a disagreement over the deal structure, limited access to data. We have also been some of the reasons behind the talks failing. Maklam is here with more.
Well, that's correct. We were just looking at Tata Consumer and Bisleri's announcement on Friday itself, the fact that the negotiations have ended. So at the same time, I was trying to find out some of the reasons. While valuation would have seemed an obvious parameter, but we understand from some of the sources in the company and ones who were working on the deal that there was a lot of delay in these negotiations. They were going on for over 8 months, and as a result of which there was some disagreement over the deal structure as well. So those were some of the factors. A lot of the data points as well were the lack of access to that were some of the factors that would have led to the deal actually falling through. Valuations, while they were on the higher side, but definitely not the main concern. And remember, Tata Consumer's beverage portfolio anyway over the last few years has been growing twice the Bisleri's growth rate. In fact, Narishco reported 44% growth CAGR between FY20 and FY23, whereas Bisleri grew about 20% between FY20 and FY15 itself. The other parts of the Tata Consumer business, which is Tata Copper Plus, which is their value-added water, was growing at a CAGR of over 100%. Their premium segment, which is actually, as a market growing 2 times the normal segment, has a market share lead of 3:1 as against Bisleri's Vedika. So Bisleri would have, Tata Consumer would have grown to Bisleri's size in a few years organically anyway. But what the deal would have given them is immediate access to the market and infrastructure. Bisleri had about 120 operational plants, a distribution network of 6,000 plus touch points, at the same time 7,500 trucks too. But now Tata's will go ahead and build their business organically for the beverage business. So that's what we've found out from our sources.
Thank you very much for that. IT stocks took a tumble. The Nifty IT index today was down 1.5%. For this month itself, the index is down close to about 4%. The worry is the global financial turmoil is going to impact growth rates and the outlook for the Indian IT company. The reason is the BFSI vertical is the largest vertical for the Indian IT companies, and this is the contribution. For the large cap companies, the exposure ranges approximately 30% for Infy and TCS, but amongst the mid caps, banking, financial and the insurance vertical together contributes close to about 60% plus for Emphasis. So amid renewed fears of a global banking crisis, what can be the impact on growth? Now, CLSA has analyzed the various scenarios, and they're saying that there are 2 scenarios. Scenario number 1 is that the crisis is contained. There is quick intervention by the central banks. Now, this may impact the decision-making in the BFSI vertical in the near term, but the impact on the other verticals should be minimal. Scenario number 2 is that this is a larger and an elongated crisis, and revenue growth for the BFSI vertical will be impacted over the next 2 to 3 quarters, and it will also impact other verticals like retail and telecom, as was seen during the global financial crisis. There is a third scenario in which a large global bank fails, sparking a wider credit crisis, prolonged global recession. But according to CLSA, there is a minimal probability of such a scenario, and hence they've ignored it for now. That said, even though there could be some impact on the top line, margins, according to CLSA, should remain resilient in both scenario number 1 and 2, at least for the large companies, and that's because they expect a calibration of the annual wage hikes, promotions in FY24. JP Morgan says the collapse of the SVB Signature Bank, concerns surrounding liquidity across US and European banks can further soften tech spends by banks over the short term, going up to 1 year, with slowing growth in the bank tech budgets. So this can impact IT in 2 ways. One, there are delays in deal ramp-ups, which impacts the revenue conversion over the next 1 or 2 quarters. But there could be a more prolonged impact in which delays in deal closures could impact revenues over 3 to 4 quarters. JP Morgan goes on to say they estimate the US regional bank exposure is quite minimal, less than 2 to 3% of overall revenues. The SVB exposure is limited to 10 to 20 basis points, but there could be some provision that companies like TCS, Infi and LTI Mindtree may need to make in Q4. They also go on to say that we've already seen a correction in stock prices, valuation multiples have come down, but JP Morgan says the estimates still do not factor the increased EPS risk from a further slowdown in bank spending. IT stocks, remember, despite the recent correction, have still outperformed the Nifty, the broader benchmark index, by 6% year to date. Now, all eyes will be on the Q4 earnings picture to get the full picture. Well, that's about IT. Let's talk about the oil and gas space, because CLSA is very bullish on the Indian gas companies due to lower spot LNG prices. The CLSA note also says there's higher gas demand should drive volume recovery in Q4. Sonal is here with the details.
Thank you for that. Well, CLSA in its note says that how these city gas distribution companies tend to benefit from falling spot LNG prices. Now remember, they had surged to levels of around $45 to $50 per MMBTU back in 2021. They have tapered down from there, and now they have almost halved from December 2022 peak and currently trading at $14 per MMBTU. So they say it's a clear beneficial trend for most of the Indian gas names. Gujarat Gas, IGL and MGL, all three of them, after seeing margin pressure in Q2 and Q3, should see some recovery in Q4 right now. Additionally, Indian gas demand, or LNG demand, that has also improved after falling for months. It has improved by 2 to 3% on a month-on-month basis, and higher demand is something which will drive a recovery in terms of volumes as well in Q4 for gas utility companies, the likes of GSPL, Petronet LNG and GAIL. For GAIL, additionally, there's another kicker, and that comes in the form of tariff hike, which is expected in next 2 weeks. The expectation is of a 50% tariff hike, which will drive multiple EPS upgrades for the stock. So that is the next trigger we are watching out for GAIL. But generally, the gas sector is in a sweet spot right now.
Yes, quite evident, right? BPCL is up 12% this month. Let's get to the fifth headline then. As stock markets across the world fall and plummet, investors are flocking to safe haven bets like gold. Prices of the yellow metal have hit an all-time high in India, Australia and UK. Fears of a global banking crisis have spurred heavy inflows into gold. Prices in India have now almost touched their all-time high levels of 60,000 rupees per 10 grams. Manisha is here with the details.
What a day. We've started the day with all-time highs, and with every half an hour passing by, we are creating new milestones when it comes to gold prices. 60,000 rupees per 10 grams is how we are trading right now. And remember, this is without the making charges or GST. So when you buy gold in the physical markets there, the gold prices already are higher than that. For the international markets as well, while we are trading at an 11-month highs, and we did do $2,000 per ounces there as well. That's not an all-time high for the US markets, because the all-time high is at $2,070 per ounce. But remember, in last 15 days, we've gained up by $200 per ounce already. So what is that? $70 to $80 on the higher side there. And it's not just India which is hitting all-time highs. In the day-to-day, we've seen Australia and UK markets also make an all-time highs in case of gold prices there. Well, there are supportive factors. You have the dollar index trading weaker. Markets have factored in a 25 basis of a rate hike, even a status quo for that matter. And the $2 trillion, which is again coming into the markets in sense of liquidities to ensure that the banks don't go under down, is something that means that the banks or the liquidity, all of that would support the gold prices.
Manisha, thank you very much for that. With that, it's a wrap on this edition of Markets Today. Thank you for watching.
Powered by